All right, guys. This is a short video on Chief JPY that bought almost the whole week. So someone was asking me, why did I buy Chief JPY the whole week? What I need you to understand is that on one of my past videos, I once explained about weekly pair movement, and I highlighted that every week, let's say this is Monday, this is Tuesday, this is Wednesday, this is Thursday, this is Friday. Every week, a pair will come and form either the low of the week or the high of the week, and then it trades away from it until it finishes its cycle. So this happens every week. Now, I would want you to see something here. I would want you to see something. This is Chief JPY. If you check very well, if I scroll here, you realize that for those who know BTMM, you realize that this was our peak formation high. Peak formation high, level 3. And what the dealer did, he traded away from it. He traded away from the peak formation high. And if you check very well, you realize that he was coming from another cycle. He was coming from another cycle. And this was on Monday, Tuesday, Wednesday, and on Thursday, he started to trade away from the high of the week. And he traded away from the high of the week. He ended the week on Friday right here. So we know that when the market maker ends the week without completing the cycle, it means that when he comes next week, he will give us another double top, which is more or less like a peak formation, but it's not a peak formation. It's called the high of the week. So if you check this one right here, this double top right here, it is the one that took place right there. It is the one that took place right there. So the dealer wanted to finish off his cycle on Monday, Tuesday, and Wednesday. He marked the new peak formation low, the new peak formation low. So I would want you to imagine this, that after the dealer has marked the peak formation low, we all know that he is supposed to trade away from that peak formation low. He's supposed to trade away from that peak formation low. So let's take, for instance, we are somewhere right here and we see this. Now, we all know that when we see the peak formation, the only thing we need is to trade away from that peak formation. The only thing we need is to trade away from that peak formation. So let's say we are seeing this now, and we are saying we have seen first leg of our peak formation. I know some of you don't know how to identify a peak formation, but then there are videos that I'm going to make about identifying a peak formation. I'm just showing you what happens on a weekly basis. I once shared this on one of the videos, so I'm just repeating what I once shared. So this is our first leg. Now, as our chart or our candles keep moving, we are expecting to see the second leg on the second day. We're expecting to see the second leg on the second day. And I always tell people that these M's and W's are not going to be as clear as you see them on your QWERTY keyboard, because if they were that clear, then everybody will be rich. So we know that if we are coming from that level 3, level 1, level 2, level 3, we expect level 1, level 2, level 3, and then we repeat the whole process again. So we were expecting to see this move appearing. So I would take it that on this day is where I was going to look for a setup to take the trade. So if I go to M15, this that I see right here on M15, it's a setup. Even without opening M15, you can see that this is a setup. So what am I going to do is the previous video that I shared on London patterns, that's the one that I'm then going to use in order for me to find out the pattern. So let's go to that particular day. Now, if I come to this day and I'm looking for a London pattern, I know I said this is the first leg, so I'm expecting something whereby the dealer will stop hunt and comes back down right where there was the previous day slow. But then the dealer decides to show me the law of the Asian with type 2. Exactly where there is the Asian law. And I see this. Now, I already know that the dealer has trapped some people with this previous leg, and it does not want to release all those pending orders that he triggered there. Because remember, there are some people who, when they see the third push, they believe that this is now the true trend. So they start adding positions. Some of them added sell positions right here, and they are still holding. So the dealer knows that if I go back down, they are going to exit with their targets. So the dealer will then shift the zone away from them. I know a way of finding out this. It's very simple. Shift the zone away from them. Then they will get scared and say, we are losing. Some will start entering sell positions right there, believing that the sell positions that are below here are going to cover up the losses. So the dealer will pull back down, make you feel better that you are not on a big loss after all, and leave you to end the week. These double lines, they are showing me that this is the end of a week and the beginning of a new week. So the dealer will leave you to end the week. So the dealer knew that if he opens with a gap right here, these guys will be wide awake at 12 a.m. on a Sunday, and they will close their positions in profit. Then they will say, we are market killers, we make money. So the dealer knows, and he opened the market exactly where he closed it the previous week, so that it does not release the volume. This leg on its own, if we view H1, it shows me that the dealer was actually trapping people. You can see it for yourself. It's so clear and so visible. You can see it for yourself that the dealer actually pushed down as a sell, and immediately he reversed the move back up to the level. So that on its own should tell you that there is no way a dealer can end the cycle like this. It means that he is what? Trapping people. Because if it was a normal setup, the dealer was supposed to go down and then end the week in consolidation, come back the following day and do this, and then he goes up. You get the point now. But the dealer quickly went back up to close the market so that he keeps people who are trapped below here right there. So he opened the market the previous week on the same place where he closed the market that on its own is what made me to buy. Remember, I sent you a setup and I showed you the direction that the dealer is going to give us an ID50 right here. This is called an ID50, whereby there is a pullback to the 50 EMA. Remember my video on ID50, you can watch it, it's there on YouTube. Thank you for the 1,300 views on that video. So the dealer pulled back to the 50 EMA and he opened right there and he gave us one ADR move, because ADR move is 93 pips. So the dealer gave us one ADR move and he closed the market right here and he gave something that looks like an HOD right there. I know some of you can't see this on H1, but it's there if you go even to M15. That's an M. If I open M15 right now, I can show you that this is an M formation on M15. I can show you that this is an M formation on M15. There you go. That's an M formation on M15. The dealer wants those people who are trapped in this zone to add more sell positions so that they will feel like the positions that they are going to enter here, the real trade traders, are going to cover losses of positions that are down here. So the dealer, the traders, they do that, and the dealer knows that. So what he's going to do is he's going to make them profit. And because as market makers, or those who use market maker method, we know that the dealer is going to trend on the 200 EMA going upwards. And there is already a peak lock which shows us that the dealer will not go back to that area. So we know that tomorrow we're expecting a safety trade. So what the dealer is going to do the next day is going to give us another strong move to the upward, another strong move upward, so that all those people who have been trapped below, they don't get a chance to escape. So sellers now have positions here. Some have positions there to cover up the loss. And then the dealer moves the second ADR away. The dealer moves the second ADR away. So you can see that he then gives us an HOD there. And I'm telling you, some people will enter a sell right there again and say, we are going to swing it. I don't know what strategy they are using, but they're saying we are going to swing it. Now, as for me, I know that if I catch the low of the week, at least I've got 3 to 5 days of market movement. I've got 3 to 5 days of market movement. So they will keep selling the pair or adding positions to cover up the losses. Some will blow accounts, some will take the loss. Then the dealer held the level. Even yesterday, we were expecting the dealer to stop hand low and go up one more time. Then we start talking about a reversal. But the dealer, can you check it out? He opened the spread yesterday and he spiked down right there to give hope to everyone who is on a sell right here. And so now everyone trusts that the pair is going downwards. But if I am to show you, you realize that he was retesting the same low he has been testing for the past 2 days. So he is retesting the same low to make those retail traders who entered here to believe that the market is going down. So they are going to put more sells. They were given hope by this. They were given hope by this. Now they are seeing hope on this day and they are seeing hope on this day. They know that surely the market is about to change the direction. But guess what? On Monday, the dealer is going to stop hand low and go up and then start to trend downwards. Now, some people are going to enter their buy there expecting a continuous trend, but the dealer would have marked the high of the week and then trend downwards. So what I'm simply saying is that The dealer, if he closes the market with peak formation low, always know that he's gonna start the market next week and continue up. If he closes on, or if he closes the market at one level, move. Just know that next week is gonna continue his move. That's exactly how the market moves. So if you see this on Tuesday, then you have to sell the market the whole week. Let alone if you see it on Monday, you know that you are selling, you're buying the pair the whole week. I've got a student of mine who is a new student, and he asked me this and I explained it to him. Then he decided to put it into practice. So he took Euro USD this week. He had a $100 account. He took Euro USD this week and he entered Euro USD right there as a sell. Sorry, he entered right there as a sell because that's where the London type 3 appeared as a sell. That is London type 3. I can see it even on H1. That is London type 3. He went for a sell. So I told him not to close. He saw level 1, he held the pair. He saw level 2, he held the pair until he came to this point on Friday. And he asked me a question and said, now my account is $2,000 from $100. Should I close my pair or should I hold? And I told him, close. Why? Because I had seen the first leg of the low of the week. And I knew that on Monday, the dealer is just going to come and stop hand low, and then he trends away. So we are expecting that since he closed the week on Friday right there, we're expecting that the dealer is going to continue up and then he ends the week and trends down. So it means that the dealer ended the week right there. That's where he ended the week. So we are expecting that he's gonna, he ended the week right there. So we're expecting that next week he's going to stop on high, form the high of the week, and then he trends away. That's all about the high of the week and the low of the week. On my next video, I'm going to talk about the low of the month and the high of the month. I'm sure it's going to assist in your trading. All you need is patience. All you need is patience, because these pullbacks, they are not interesting at all, but they are rewarding. Cheers.